Hello future and fellow investors, it's Mike with Diamond Hand Stock Picks. On this channel we're looking for the most disruptive and unique stocks to fill our portfolios with. Stocks that are going to give us massive gains, high growth, the best opportunities for us to become financially free. All I ask from you is to hit that like and subscribe button for my time. It's free, it only takes a second. As a matter of fact, I'll wait for you, go ahead. Alright, just click. I appreciate that very much. And I don't want to waste any of your time, so let's get right into it. Today I'll be giving you my price analysis, where I'm going to be buying, where I'm going to be selling, and how much money we should be making off these plays, and when I think this is all going to happen. So sit back, relax, and get your notepad out, and let's make some money. Okay guys, today we're going to be talking about CrowdStrike, ticker symbol CRWD. CrowdStrike Holdings provides cloud-delivered solutions for endpoint cloud workload protection in the United States, Australia, Germany, India, Israel, Romania, and the United Kingdom. It offers 19 cloud modules in its Falcon platform through a software as a service subscription-based model that covers various security markets, such as corporate workload security, security and vulnerability management, managed security services, IT operations management, threat intelligence services, identity protection, and log management. The company primarily sells its platform and cloud modules through its direct sales team. CrowdStrike Holdings, Inc. was incorporated in 2011 and is headquartered in Sunnyvale, California. So a little bit about CrowdStrike. CrowdStrike Holdings just got an upgrade through Zacks Research. Upgraded to a buy and upgraded with more money to buy from. So there's been a lot of news about CrowdStrike lately. It's up and coming, and it's not stopping. People thought it was going to kind of level off, but it's proved everybody wrong. This upgrade primarily reflects an upward trend in earnings estimates, which is the biggest thing for investors. The more the stock earns, the more we earn. Like it says, which is one of the most powerful forces impacting stock prices. The main thing in this article is this cloud-based security company is expected to earn 36 cents per share for the fiscal year ending in January 2022, which represents a year-over-year change of 33.3%. Anything over 25% is what we're looking for in a company. If they're annually growing over 25%, their stock price is going to be annually growing by 25%. Or, well, you know, it should. Sometimes it actually grows more, depending on certain catalysts. And it could go down with certain different rankings by certain analysts. This one here has just been getting hammered with good news, which is, you know, music to my ears. Is what I'm looking for. Analysts have been steadily raising their estimates for CrowdStrike over the past 3 months. The Zacks consensus estimate for the company has increased by 23.2%. Bottom line, everybody's looking at CrowdStrike. Everybody believes in CrowdStrike. Everybody knows where CrowdStrike is going, and I'm with them on this. CrowdStrike Holdings shares are gaining ground in late this Tuesday, as the security software company posted better than expected financial results for its fiscal fourth quarter ended in January 31st. For the quarter, CrowdStrike, ticker symbol CRWD, posted revenue of $264 million, up 74%, and well ahead of both the company's guidance range of $245.5 million to $250 million and street consensus at $250.4 million. Subscription revenue was $244.7 million, up 77%. Annual recurring revenue was $1.5 billion, up 75%. I guess you guys can kind of follow along here and see where this company is going. The company has had an adjusted profit of 13 cents a share above the guidance range of 8 to 9 cents as a share. On a GAAP basis, the company lost $19 million or 9 cents a share, fully retainable and regainable. For the full year, CrowdStrike had revenue of $874 million, up 82%. That's huge. You know, anything over 25% is wonderful, outstanding. 82% increase in revenue. They're looking to create a lot of income, and very rapidly. CrowdStrike is projecting revenue for the fiscal first quarter ending in April 30th of $287.8 million to $292.1 million, with non-GAAP profits of 5 and 6 cents a share. That's above the old street consensus at $267.9 million and 4 cents a share. For January 22nd fiscal year, the company sees revenue of $1.31 billion and up, about 50% at the midpoint of the range, with a non-GAAP profit of 27 to 30 cents per share. Previous consensus called for $1.22 billion and a non-GAAP profit of 28 cents a share. CrowdStrike delivered a record number of fourth quarter and exceptional finish to a strong fiscal year. CEO George Kurtz said in a statement, combined with strong secular tailwinds, including digital transformation, unprecedented threat environment, and our expanding technology portfolio, which now includes leading index-free data ingestion capabilities, we believe that we're in an ideal position to further extend our leadership in the security cloud category we pioneered. So they are definitely trying to keep us away from threats, from Russia, North Korea, China. There's a lot of security threats. Cybersecurity, it's in the headlines every day. CrowdStrike, they're there to battle all this, and they're very much needed right now. And they're taking the bull by the horns, so to speak. So that's the reason their earnings are going up, their revenues are going up, and they're doing a good job. So institutions are believing in them, and the people they're selling their products to are believing in them. That's the reason for the stock price, consistently going vertical. All right, we can see here that, just a year ago, $49, they got all the way up to 242, 245. I think it was a little higher than that. So we know that it's tested 242, so we know it'll probably get back there and relatively fast. Now, if you watch the trend line here, it looks beautiful. Even with the big, correction in the stock market, it just bounced right back. And if you follow the line, it's about where it should be. So it never really fell in stock price. This literally just corrected. And if this trend line stays the same, you can see where it's going to go next year. It's from here on, it's, $140. So, be it everything stays the same, their revenue stay increasing, this company is going to be huge. And you can see quarter over quarter over quarter over quarter over quarter, they're just going vertical. Everything's going in the right direction. They haven't had a bad quarter, and they beat their estimated price per share every single quarter. Okay, now that's hard to do, especially for almost 2 years in a row here. They're just killing it. Tip ranks, they have a high consensus of 295, average of 253, and a low of 225. Okay, the stock is trading at 194, so it's nowhere near trading where it should be. This is going to be an instant runner here. I believe it's a very safe place to put your money and make some good gains. I believe these price targets are conservative. My price target is a little higher. I'd buy this stock anywhere from now. If it dips, load it up. If it gets down to 190 or below, it's a screaming deal. Let's be honest. Right now, it's a great buy. Anything under 200, honestly, and you're gonna have gains. And I believe 30% minimum gains, and that's even buying it at 200. So you don't have to rush to get into this one. You might want to buy in a little at a time, maybe in thirds, maybe over time. If you see the price going lower, wait a couple days. If you see a dip, buy the dip. If it starts raising, don't chase it. Anytime this stock gets over 200, I probably won't be buying anymore. That's the reason I'm bringing you this video, because right now it is in a buy zone, and I believe it is going to have huge gains. My 12-month price target on this one is over 300, and I probably will be selling at the 300 mark. That's where I'm in it. That's going to be how I play this play. We got a CNN business, their stock price forecast. They have 21 analysts, and they're at 295, 250, and 205. So no matter who's looking at this one, what analyst is looking at this one, what platform is looking at this one, everyone's, everyone's in pretty much the same boat here. And I think the 295, like I said, is a very conservative price target. I believe it's going to go over 300. All buys, 4 holds, 0 sells, 0 underperforms, all green here. All the sales are in green. If you see, everything's vertical, all the stairs are going vertical. The analyst forecast, they're all the sales, earnings, everything's pretty much vertical, except for the analyst forecast here. Reported earnings are vertical. Analyst forecast is kind of going horizontal for a while. But as you can see, for the last 2 years, there's been nothing horizontal about this stock. This is a vertical running stock. You can see the trend line a lot better here. You can see how if you follow this straight, it's trading right about where it should be trading. So right now it is in a buy zone. And like I said, even the high here, it's kind of curving down to the right, which they're expecting it to, the revenues to start decreasing. But cybersecurity is a real thing. It's a real threat, and it's been more and more and more and more and more. You've heard about it, through the through everything. They're into everything. They're stealing people's identities. They're in social media platforms, politics. Cybersecurity is really needed, and the threat is real. So, like I said, these guys will always have a job. I don't see them going out of business ever. And then down to the institutions. 72% of shares are held by institutions. That's huge. That means this is a very, very solid stock. The stock's not going to dip. It's not going to go anywhere. You're not going to see a lot of volatility like you are in like high growth stocks. This one is institutionally owned, and they hold it for the long run. They know where the money's at. And there's 896 institutions holding the stock. That's an extreme number of institutions. That's a strong institutional backing. It's just, goes to show everything that we've talked about today, everything that I've mentioned. It's just 100% backed. When you have that much institutional backing, you're in a solid elite group. Vanguard, BlackRock, Price, Tiger Global. It goes on and on and on. Literally 896 institutions holding it. So this is a very solid stock. There's not much left for retail investors, us, which will keep that stock price going higher and higher and higher. And the more institutions see it, they're going to be buying more and adding to their portfolio. So, like I said, this dipping, it would be far and few. I think it's a very solid stock to have in your portfolio. I can see huge gains, and I don't see much negative at all. I really don't have much of a bear case scenario, except for the earnings could drop off a little bit, scare some institutional buyers into selling some shares. But other than that, my overall outlook's not going to change. It's $300 a share for me at the end of 12 months, and that sums that up on CrowdStrike. I do have 2 quick penny stocks I wanted to go over under $1 for my value investors. They like the penny stocks, and these ones here I'm going to be holding for just till they double up, and then they're out. I'm not expecting to make $1 million off of these, but I do think they're easy little double up penny stocks. The first one is Synthetic Biologics. This one here, it's a microbiome therapeutics. It's for gastrointestinal, gas and stomach problems, and they have a kind of big catalyst coming up. They're going to do a patient enrollment for phase 1B/2A clinical trials the first quarter 2021, which is almost over now. So there should be a huge catalyst coming for Synthetic Biologics, but I don't know exactly when it's going to conclude. But I do know that right now it's trading at 80 cents, and as soon as that's concluded and there's any kind of positive news, this will go to $2 easy. As a matter of fact, the low price on this one is $2.50. I probably won't wait for it to hit $2.50. Even if I double up $1.60, I'll probably get out of this one. If it runs up to $2 really quick, then hey, I'll take it. But this is a quick double up play. Next one is PTN, Paluten, pretty sure most of you guys might have heard about this one. They have they just had a positive phase 2 study results identifying most appropriate patient population, endpoints, time points. Next study is going to be phase 2-3 study targeted for mid-calendar year 2021. So they've already had phase 1 and phase 2, so this is going to go phase 2 to 3. Anytime there's catalysts like this, these biotechs, they go through the roof, and they're quick plays. You can hold it forever and ever and ever. You're not going to make $1 million off of it, but once these catalysts hit and they're positive news, you're going to easily double your money. And this one, on both of these, I'm actually invested in myself. This is a low target of 2, average of 2.33, a high of 3. Right now it's trading at 74 cents. So, you know, like I said, these are pretty much easy double ups for you. I'm hoping anyways, hopefully everything goes right. But I figured I'd throw those in for you guys. I know my value investors like penny stocks. They're hard to find these days. You know, a good one, solid one. You know, it could go either way depending on the results of the test and the studies. But I believe both these are going to at least double up. You know, that's pretty much safe to say. You can hold them for as long as you want. I'm doubling my money and I'm out. All right, guys. That's it for this video. Thank you for spending some time with me. Thanks for hitting that like and subscribe button. It really means a lot to me and the channel. Make sure that you do your own due diligence. You study these stocks. You investigate them. You know, you get your PI hat on and you know, you do your due diligence and you check these things out. You know, find as much news as you can on them. You might find that one bad piece of news, you know, that no one else is talking about, and you know, before anyone else hits it, you know, you might want to stay away. You also might find a huge catalyst that no one's talking about, and it's going to make the price of your stock move. So it's very important to do your homework. And then when you do buy a stock, you know, hold it with conviction. You know, through the dips, the ups and the downs. Red days, buy. You know, green days, kick back and enjoy it. But when you do get a stock that you love and you buy it, hold on tight with diamond hands, and we'll see you on the next one.